Hello, fellow traders. 'Tis I, the Rumpled One, coming to you live, not live, but coming to you on Wednesday, April the 7th, the year's 2021. Let's talk trading. Highs and lows, part 3 with Walmal. And just like part 1 and part 2, this video is for educational purposes only. Your results may differ from mine and from Walmal's. Now, we've been talking about highs and lows. And so I went back, a little time travel here, and I loaded up an indicator that I wrote back in the 2017. It's a donational, and it's the TRO 2017 Price Action Support Resistance Indicator. That's what I call it. And so right now, we're looking at H1 chart, and what it does is it says, hey, right here we have a low, which some people would call support, but right here it acted like resistance. So 7 bars ago it was support, and this current bar it's acting like resistance. And so that's another way to use highs and lows. This way you don't have to tell a story. You just have to basically trade what you see and act accordingly. What do you say, Walmal?
Well, I think it's very useful because, a lot of times, I was saying before, we saw that big run where it ran down off the 3,800 level and ran all the way down to, well, what did it get down to? On my chart anyway, it got down to, somewhere around, 37.29. Basically 27.30, and I'm saying, well, this thing's got to go back up to the 3,800. I still believe it's going to get there. But what's very interesting is that it got right to that spot where that you just called out. That place right there about 93, and it hit that level, and for whatever reason, it's turned around from that point and has gone back down again. Now, that doesn't mean that's going to go and last forever, because every line eventually gets broken. Every line gets breached at some point in time. But if I was in a trade down there from that 30 level, you know what? That may be a place where I say, you know what? I'm going to take a bunch of my money off the table, put it in my pocket, and maybe I'll let some of it run and move my stop loss to the place where that second trade just literally becomes a trade that I can't lose.
Right.
That's not a bad strategy.
Yeah, and if you were watching the chart, there was a high from the 2 bars ago. You see it got wiped out because it didn't act like a support or resistance line, because price went right through it.
Exactly right. And that's what happens sometimes. These things are, they're not walls. Okay, we can't look at them as a wall. We have to look at it as okay, this is what I keep on calling a point of interest, an area of interest. I call it an area of interest. Some people call it a point of interest. I call it an area of resistance. Just knowing that price, for whatever reason, in those areas does tend to go and react one way or the other. One way it reacts is it blasts through it. Another way it reacts is that it gets turned around, or it consolidates at that level. The price starts to go sideways, up and down, up and down, up and down. And that's just what price does. But again, if I was in a trade and I was up some money, I can go and say, hey, I'm going to put my TP up there, or I can go and say, you know what, I'm going to take this amount of money off the table right there, and and just have a good place where I can go and take some profit. And some people like to go and take breakouts from those areas, or take the reversal off of those areas. They're all places where you can go and make some trades. It's a place of interest, it's an area of interest. We know the price is going to react there one way or the other. Take advantage of it, and that doesn't mean that you're creating an entire new, trading plan. But like, for instance, if you already have a methodology that you have in place and it's been successful for you, well, maybe by just using this can make you a little bit more successful. Maybe put a little bit more profit in your pocket. Maybe go and confirm that, hey, this is a really good place. For instance, let's say that line, it's not, but let's say that line 93 was at 90, and let's say that was the opening of the hour. Well, maybe that's a good place where I can go short, for a Walmal trade, or go long, depending on how the hourly candle shapes up, and it'll give you a good idea what to do.
Yeah, and right now, even though I'm looking at this support resistance price action chart, I can see we're in the order block. So if I switch over to the order block chart, where is it? You can see price came right down into that order block and is now coming back up.
Yep, and that's exactly right. And so, again, what I think is funny is that, I know some people, will go and they make something their pet tool, pet whatever, and if it makes money for you, man, you do that. Do it every time, consistently, over and over and over again. Make money that way. But what I'm finding as a trader, the more years that I trade, is that a lot of times these different methods that different people come up with, there's so often that I'm taking the same trade. I've got one guy that I've traded with in the past, and I take a trade, and he take a trade, and he trades something totally different than I do. Yet at the same time, we'd actually take the trades in the same exact spot. And it's sort of like, well, a lot of times they just tend to line up in those same places.
Right. And, the thing is about the order block, some people say, well, is this an order block? Isn't it? And that's one of the reasons why, I like to use things like highs and lows. Because right here we got close to the of a holo, the lowest H1 open right here, and price turned around. Also, when this bear candle this hour came down, you see how it filled that imbalance that the big bullish candle created. And I think a tip was, this candle didn't make a higher high from the previous H1, fell through that wick zone of that previous H1, and so it's like, well, where's it need to go? Well, it probably needs to go and take out that imbalance, which it did.
Right. And so what you're able to do is use the tools that are in your toolbox, and you can go and just use the different things that are available to you. And I'm not saying complicate things. That's not what I'm saying. But at the same time, if it goes and says, okay, if we got reason 1 to take the trade, reason 2 to take the trade, that may be a good reason to go and take the trade. Still can fail on you, but the thing is, at least you're trading your method, and you're getting some feedback from the market that, hey, there's a good chance that my trade will be successful. That's all we're trying to do, is get a little bit of an edge.
Exactly. But back to the main topic of highs and lows. I know a lot of us, we can switch over to the M1 chart, and you can see here, once again, what happened and what's happening. We've got some lows here that haven't been broken. And we've got some highs that haven't been broken right here. So we've got this little congested area. But there's a lot of white space between here and here on my chart. So if this thing seems like if it can break, say, 57, looks like it could get up to 69.
Yeah, that's what I'm seeing as well. In fact, I wanted to go and take a trade basically at the 50 line, and the reason why was it wasn't a Walmal, but it was more of price. There was a lot of reasons to go there. One was because I like doing those DSR trades, as you know. It was a perfect entry for a DSR trade, and we have lots of reasons to go. You're going into an area of lots of white space, and what that white space tells us is that there's nothing there really to go and prevent you from going up. So, if I would have taken that trade at that level, could have easily picked up 18 pips. Now, I don't know if it's going to happen. Now, it hasn't happened as of yet, but there's a potential of getting the 18 pips or so.
Right, and you can see that from the 1 minute, you see the big bear candle. Well, there's an area of imbalance. Once again, I can see it without even having it on the chart, but I'll switch charts to show it, and here it is right here. Between 55 and 65, we've got a nice red imbalance, and you can see how price is oscillating between the bullish and bearish imbalances right now. They're only separated by a pip and a point.
So, right, and that's what happens. I'm finding that these imbalances. It's kind of funny that everybody goes and likes to go and trade off of, support and resistance. I'm finding that these imbalances, to a certain extent, to me anyway, seem to be a little bit better, because I think it's actually pinpointing a place where to go, where to go. And the reason why I think it pinpoints it is because, the problem with support and resistance, and I trade support and resistance, so no haters out there. But the problem with it is the way you would go and draw support and resistance, it's probably different the way I would do it, because it's an objective thing based on what you see. And so what happens is you wind up you're having some problems with that. So what do? If I'm doing support and resistance, I don't draw a line. I usually draw a box, because knowing that other people's charts, the way people go and do it, it's just going to go and look a little bit different. But the nice thing about these imbalance bars or imbalance zones is that, there's no question about where it is. And what I find a lot of times is that they tend to line up a lot of times with some previous support and resistance zones anyway.
Exactly.
So it's just, it's nice and convenient. I can go and have your wonderful indicator, draw it up on the screen for me. I don't have to think about it. And there was a trader out, I think on Facebook yesterday or today, maybe even, went and said that, what they liked about one of the methods, I think it was the Walmal method, what they liked about it was easy to go and plug into it, go and do it, and there was no real thought process in it, other than the fact that, you got to go and, take care of the things in terms of risk management. That's the thing that's really important on the Walmal method. Well, that's what I like about these imbalance bars, is that it's there, and there's some thought process. Do I take this trade? Do I not take the trade? But the thing is, I don't have to sit there and figure out, where these resistance zones are, where these support zones are, draw them out, figure it out, see if this is a strong one. Then we start getting into the minutia things. Is this a strong support? Or is this a weak support? Is this, and you start getting into all those games, and it's like, that's why I changed my mind and saying, nope, I'm doing zones now, and I'm just going to look at it. Okay, it's a zone, it's a point of interest, it's an area that I need to be cautious with, but it's also an area where I can take a trade from.
Yeah, exactly. Because, and the thing is, like you said, minutia, or as I like to say it, trying to get too cute, because there's just so many of these different things, that we come up with. And as I said, it's storytelling. And they really weren't busting my chops, but they were saying, don't be downing other people's methods. And I think they didn't understand me. I'm not downing order blocks at all. I'm just saying I've yet to find a concrete definition of the order block. Imbalance, it was straightforward, and I can code the indicator. The order block, it's still a guesstimate, and so I had to basically create what I consider an order block, and then I also say, potential order block, which I think's even better. And then beyond that, it's like, well, what is the highest low or the lowest high? Kind of like an alternate to the whole low, the highest open, lowest open. So when I see those points on the chart, I go, for example, right here. Here is the lowest high of the M1, and that's right where price is. So if price goes below it and then crosses above it, I'd look to go long. It's that simple.
Yeah, that's part of just trading, and and looking for those things in experience, I'm sure, as well. But that's all we can do. So I just like the idea that we can go and put a number of things together on the chart to help us go and figure out the direction of what we're going to go and do, and use those, use those lows, use those highs, use those support, use those resistance, use the imbalance zones, use whatever tool you have, and and put together a plan around it.
Right. And in fact, the fastest 15 minutes in trading is up again, but I just noticed price came down and touched that top of that imbalance zone here on the M1, which would have been good for a quick 2 or 3 pips. But that's it. So fellow traders, if you have any questions about highs and lows, or if you'd like to tell us how you're using highs and lows, I'd like to hear from you. In the meantime, when you sit down at your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.